You know, I don't know what I would do or where I do without yes. It's kind of distorting it at first. Yeah, just that. Oh, sure. I say that. Good afternoon. See that it is 1 o'clock or a little after that, so I'll go ahead and call the meeting of the State Board of Finance to order. I see that we do have a quorum. We have online, let's see, board member Chad May, and then we got Commissioner Susanna Marshall as well, participating online. Afternoon to y'all as well. Did a couple real quick introductions. We have some new members of the State Board of Finance. So first, Mr. Tyler Steele. Afternoon and welcome. Glad you're part of us. And then we also have Ms. Secretary Leslie Fiskin, who's here, not here. It's confusing. You know what? I've worked with both of them for a long time. I counted and enjoyed to work with both of them, and I can tell the difference. I also have to setting in as negative for Commissioner claims not being made today. So, with that call to order, first thing we'll consider are the minutes from the May 12th, 2025 meeting and the June 12th, 2025 meeting. Let's get a second to go look at the minutes. Motion to approve. Have a motion. Is there a second? Second by Secretary Fiskin. All those in favor say aye to approve the minutes. Aye. All those opposed, no. Motion passes. Next, I'm going to lateral over to Treasurer Thurston to give us the Treasurer report.
Thank you, Chairman. So we've had stable, consistent results this last quarter. The fourth quarter by almost $3 million for a total receipt of almost $95 million. And I believe we've just had a record year of returns of almost $400 million. So I'm going to allow the team to kind of share more about that.
Thank you, Mr. Treasurer, Chairman Hudson, and board members. I'm Stephen Kilgore, Director of Investment Accounting. In sharing highlights from fiscal year 25, we begin with the trend in investment revenues on a month-by-month basis. You have your slides. Beginning on the second slide, we can see the month-by-month trend in short-term and long-term investment revenue. Most recent month provided $27.1 million. Medium and long-term bonds, or medium and long-term bonds, while $5.8 million from short-term investments. Long-term revenue decreased from the prior month, while short-term investment income receipts increased. The third slide shows the division of income by type of bond, with the short-term categories at the top and long-term totals below. Accrued income, second to the right, includes interest we have earned but not received yet. Ledger receipted income, which represents funds available for immediate expenditure, is on the right-hand side in terms of those ledger categories. Quarterly accrued earnings totaled $99.4 million versus $94.9 million on a receipted basis. The largest contributors to that total within short-term holdings were commercial paper. In the long-term segment, mortgage-backed securities contributed in excess of $50 million to earnings. Corporate bonds, U.S. Treasury and agency bonds, Israel bonds, and Arkansas municipal bonds continue to provide components of that income. Slide 4 shows the division among assets by book value in percentage terms, with mortgage-backed securities and other loan-backed securities at close to 56.2% of the total. Government bonds at 19.1%, short-term investments at 14%, and medium to longer-term bonds at 10.7%. Slide 5 shows trends in investment income over recent quarters and then by fiscal year. So fiscal year 2025 investment income varied somewhat by quarter, beginning the year with close to 102 million in net earnings for the first quarter, declining to a lower total for January through March, but ending the year with 99 million in the most recent quarter. Gains and losses on bond sales were not material. Total net income by fiscal year continued to increase, growing from 380 million for fiscal year 2024, just over 398 million for this last fiscal year. Fiscal year 2025 earnings were more than 10 times those in fiscal year 2021. Book return was 3.5% for this last quarter and 3.493% for the fiscal year, continuing the trend of increase with rising interest rates. That total return was 6.663% for the fiscal year, as bond price changes were positive, adding to coupon income returns in this calculation. The next slide shows a mix of the portfolio by duration group. That's at the top slide. That illustration is on a market value basis, so the exact allocation is impacted by bond price changes as well as by purchases and maturities. The middle chart shows corporate bonds by rating as well as in terms of their share of the total for corporate bonds. Largest group being close to 25% is at single A for Standard & Poor's and A2 for Moody's. Below that, all commercial paper holdings are at the A1 Standard & Poor's and P1 for Moody's. Slide 7 that shows the trend in bond yields over recent fiscal years, alongside bright green, the Arkansas portfolio annualized return. I would now like to turn it over to investment managers Steve Pulley and Robert Romanek to discuss the portfolio and plans from a strategic perspective.
Thanks, Stephen, Mr. Chairman and Board. Once again, we're reporting good numbers, good results for the quarter, exceeding our benchmark to go along with record earnings for fiscal year 25, topping out at almost $400 million for the year. This occurrence is not happenstance. It began about 3 years ago when Robert and I made the decision to materially change the composition of the long-term portfolio. These changes included adding more diversity of the products in terms of treasuries and corporates, along with the mortgage-backed sector. Secondly, we wanted to maintain a consistent duration profile, not to take additional market risk. And thirdly, we wanted to change the convexity profile from negative to positive. These changes are evident in the past 8 quarters of consistent returns to go along with a stable income stream. The bond market over the past 3 years presented many challenges, coming off the lowest yields in recorded history in 2020 to go into the longest recorded inverted yield curve that just finished up last September, as the Fed changed their monetary policy and then cut interest rates by 4 percentage points. This doesn't even take into account the global geopolitical upheaval that has occurred, along with the economic, fiscal, and political changes that have taken place just over the last few months. I would say we're doing pretty well, not to mention all within the mandates of maintaining ample liquidity and safety of our principal and a solid return on their principal. Our investment team has performed well. And if you go back 3 years, you'll see that the portfolio has generated well over $1 billion to the state of Arkansas and almost $75 million for the state and local governments that participated in our money management trust fund. We look forward to 2026, whatever the challenges may come. Thank you, Chairman Hudson. Thank you, Treasurer Thurston, and the board for giving us the opportunity to serve in this unique and important capacity. And with that, I'll turn it over to Robert, let him give you the macro view and set the benchmark for Q1.
Thanks, Steve. Good afternoon, Chairman Hudson, Treasurer Thurston, and members of the board. With your consent, I'll be setting the new target rate of book return for the first quarter of fiscal year 26. At their scheduled meeting on July 30th, Federal Reserve Committee members voted to keep monetary policy on hold. This decision represented the 5th consecutive pause of the easing cycle and left the Fed funds target range at 4.25% to 4.5%. Despite mounting pressure from the Trump administration to reduce short-term lending rates, Federal Reserve officials have remained resolute in their views that until uncertainty surrounding tariff policy and its impact on the economy is better understood, they prefer to be more cautious and vigilant in managing inflation, leaving this variable presents larger upside risks to the economy. Evidence of tariff-related price increases have yet to show a significant impact on consumers. And even with the disappointing July jobs reports, which showed an alarming downward revision to the prior months, the unemployment rate held steady at 4.2%, exhibiting a labor market near full employment. The Fed's dot plot or forward projection for short-term borrowing rates still forecasts 2 interest rate cuts for 2025. Notably, at last week's Fed meeting, 2 governors dissented in favor of a quarter-point rate cut, representing the first double dissent in more than 30 years. However, comments delivered by the Fed chairman post-policy decision express a preference for patience, conveying that most committee members are in no rush to deliver the first rate cuts for 2025. This should keep interest rates contained to their current range until the next scheduled FOMC meeting draws closer in mid-September. Given this outlook, we are proposing to increase the target rate of book return for the July through September period from a range of 3.35 to 3.45% to a new range 3.4 to 3.5%. Thank you, Chairman Hudson.
Before I entertain the motion on setting the book rate of return, any questions for the treasurer staff on the portfolio performance? Real quickly, just in terms of the likelihood of a rate cut, say, from some undetermined magnitude at this point, with the likelihood increasing in future rate cuts, just kind of give some commentary for the board in terms of what you think that will mean in terms of overall performance direction. Where I'm kind of going with this, I think there's a lot of conventional wisdom that you have conversations with policymakers that if the Fed reduces rates, that automatically means that we're going to get a corresponding diminution in our book rate of return. Could you just kind of give some commentary on how we've hedged against that in terms of portfolio structure? Immediate rate cuts don't mean immediate drop in book rate of return.
Well, it's interesting that it's very similar to where we were a year ago. We were looking this time a year ago, you had asked similar forecasting, and we were looking at, I think, 8 or 9 rate cuts. Yeah. So we did some analysis, try to be as conservative as possible. We thought we may lose 10 to 12% off our income with those scenarios played out. We didn't see it. I don't know that I'm too concerned. We'll just play it as it comes to us, but I feel pretty good where we are. I think the portfolio is in good shape. I think we're ready to handle a rate cut on the short end of it, and I think the projection is we're basically 4 3/8 on Fed funds, 10 years below that rate right now. So I think it'll be okay regardless of what happens. I'll just hedge my bets and say let's just stay down the middle and keep playing ball.
One of the things I just point out to the board as well is our fund balances are staggering. We had very, very high fund balances, right? And even some give back on rate of return relative to $3 billion in reserves, which we need no bit at all. We're still going to get appreciable monetary returns back to the state. We're fully expecting budgetary standpoint that we'll see that income. Maybe commission. We'll still have large amounts relative to historical interest earnings. Board members, any other questions or comments to share? So I'll entertain a motion to set the target rate of book return for the July through September 2025 quarterly period from a range of 3.35% to 3.345% to the new range of 3.4% to 3.50%. Do I have a motion? So got a motion or a second? Second. Got a second as well. All those in favor say aye. Aye. All those opposed, no. Motion passes. We'll now move to our normal quarterly motions. As chairman of the State Board of Finance, I make a motion to the board that no funds are available for deposit in the State Board of Finance Certificate of Deposit Program. Can I have a second on the motion? Second by Secretary Biscuit. All those in favor of the motion, please say aye. Aye. All those opposed, no. The motion passes. As Chairman of the State Board of Finance, I make a motion that the Board Director Treasurer of State purchase warrants for the succeeding quarter, July 1, 2025 through September 30, 2025, pursuant to Act 1088 of 2013, to keep reasonable amounts in demand deposits in money markets during the next quarter for the transaction of day-to-day activities of the state. And a second to my motion. Second by Secretary Biscuit. All those in favor of the motion, please say aye. Aye. All those opposed, no. The motion passes. We'll now move to our annual motions. We're going to consider these in batch for items 1 through 6, and then 7 and 8 we'll take as separate votes. So 1 through 6 are just basic instructions to treasurer staff about maintaining our ordinary course of business record-keeping practices. It's also approving the collateralization policy for Treasury of the State and making sure that we have offsetting collateral for all of our investments. Also approving the code of ethics for the Board of Finance and the members of the staff and Treasury of State. It's also improving the minimum qualifications for the Board of State. Anybody who handles Board of Finance or the Treasury of State, anybody who handles the state treasury funds. Is there any questions about the motions for items 1 through 6 that are provided in the packet? If not, I'll take it. Yes, go ahead.
Chairman. Thank you, sir. I would just like, I did not notice any proposed amendments to the collateralization policy. I just would like confirmation of that, since it does have to do with our financial institutions in the state.
But no changes that I'm aware of. Just looking at the treasurer staff, no modifications that were made to that. It's as it was.
Great. Thank you very much.
Any other questions? Hearing none, I'll take a motion to approve. Motion by Secretary Christie. Do I have a second?
Second.
All those in favor say aye. Aye. All those opposed, no. The motion passes. Now we'll take up item number 7. This is to approve a temporary investment policy for the captive insurance. So we talked about this the past couple of meetings. We've now formed a state captive to handle our property insurance. We are working with our investment advisor, Stevens, also the treasurer, to develop a long-term investment policy. But until that long-term investment policy is established, the funds do need to be invested someplace. So essentially, looking at the treasurer staff, this temporary policy authorizes the treasurer staff to invest those funds as it does the rest of the portfolio. So any other authorized investment in the treasurer's portfolio, the captive can also be likewise invested. Is that fair statement? Fair explanation of that. Okay. Any questions about it? Hearing none, I'll take a motion to approve the temporary investment policy for the Arkansas Captive Insurance. Motion by Secretary Piston, second. Second. All those in favor say aye. Aye. All those opposed, no. The motion passes. The next item we'll take up is the remote meeting policy. In our just ended legislative session, the General Assembly passed Act 505, which essentially requires boards and commissions that have remote meeting capabilities to have a written policy kind of outlining parameters of that. So this is just the Board of Finance's statement of its policy. And I'll just note this, since we have 2 members of the Board of Finance that are participating remotely, we'll make this policy effective upon the commencement of today's meeting. So, are there any questions about the policy? Hearing none, I'll take a motion to approve.
Make that motion.
Motion by Secretary Biskin. I'll take yours, Commissioner Marshall, as a second. All those in favor say aye. Aye. All those opposed, no. The motion passes. And with that, we'll move to our EBD matters, and I'll recognize Mr. Grant Wallace to present to us.
Just one second. I'm following the
Yes, sir.
pages correctly. Okay, we will, the next section in your packet is the state captive program. If we can, let's go ahead and start there. The first item in that section is the emergency rule. And this will be the rule that kind of helps govern the processing of claims. And we're just focusing on claims that were filed prior to July 1st and the way those need to be treated, and the ones that were filed after July 1st and how those need to be treated. This is an emergency just to get us going and making sure that we are processing as we should be while we work on the permanent set of rules that will be coming before you all in the future. Be glad to answer any questions on that.
Any questions? Now I'll hear a motion to approve the emergency rule. Thank you. Second? Second. All those in favor say aye. Aye. All those opposed, no. The emergency rule is adopted. And yes, this will go next to legislative review before it's being filed. Correct?
Yes, sir.
All right.
The next section, you have the University of Arkansas Athletics Program and their properties. This was held separate and not included in the other reviews when we did the previous rate setting exercise and deductible setting exercise. What we have worked out with the university is we are going to set their 2025 through 2026 deductible at $1 million per occurrence, which will result in a blended rate of 8 cents. And you'll see down there kind of the proposed premium and everything. But that those two are the bigger aspects of making sure the deductible gets approved at $1 million per occurrence and that the rate is set at the blended rate of 8 cents.
Great question for you. You know, lots of these facilities are located right beside each other. So in terms of the policy definition of occurrence, is it per occurrence per building, or if there was a tornado that would hit several buildings, that is a single occurrence with a single deductible?
Right, it would be the occurrence per event. So if there were a tornado that were to blast through the middle of campus and hit all three of Barnhill, the football stadium and the baseball stadium, it's $1 million.
And the UA is good at looking at this.
We did our best to try to work within their budget constraints, understanding the certain situation that they're in, to not have a huge swing in the premium that was due, and this was that exercise.
Any questions? Hearing none, I'll take a motion to approve the deductible and blended rate for the UA facilities. Motion by Secretary Fisker, is there a second? Second. All those in favor say aye. Aye. All those opposed, no. The rates and deductible are approved.
So the next item in your packet is what is being identified as the lead policy, and this will be the policy for all participants within the program as well as the STIP. So if you'll remember back, the state is absorbing the first $50 million of loss. This is how losses, once that $50 million is exhausted, this is how those losses would be managed, and the various policy restrictions, coverage levels, all those specific finite details would be managed in that instance. This was worked on with all of our partners, Stevens, Pier Knight, and WTW, K&L, the overseas market, domestic markets. Everybody has come around and agreed to the definition.
So the reinsurers in Lloyd's market adopted this as well. So
Yes.
we get uniform coverage for everybody.
Yes, sir.
Any questions? Hearing none, I'll take a motion to adopt the formal policy for the property insurance. Second. So, all those in favor say aye. Aye. All those opposed, no. The policy, formal policy is adopted.
Now we will go to the EVD packet.
Formularies.
Formulation, the next thing on the list. Just making sure. Right, that's what I thought. Okay, so we actually have the contracts first. So there are 3 contracts before you. 2 of them are special procurements, and then 1 of them is an annual 1-year renewal. So the first one in your packet is a special procurement with HMO Partners. The current expiration date is this August. We are looking to extend this contract for 16 months to get us through December 31st of 2026. This now will give us time to re-strategize on the RFP process and the way that we are currently managing these services, get a bid out and get a transition made. This would be in the total amount of $86 million. I'm glad to answer any questions.
And we're on page 125 for the item.
And it's getting a little jumbled, so the exact contract stuff is not right behind the section, and so apologies for that.
That's the summary.
Right, so the summary document does cover everything.
I had one question or grant, just kind of comment. So with this special procurement, I know this is in summary, but just to make sure we're all on the same page, there's no disruption in service at all.
Right, this would ensure that we do not have a disruption in service.
Okay.
And the contract text starts, I think, on page 212. You're right. These are our standard state for contracts. Any questions on the HMO partners?
Mr. Chair, I do have a quick question.
Go
So
ahead.
thank you. If this gets us, Grant, if this gets us through December 31st of 26, then if we were to extend it, it's for coverage for calendar year 27? Or is this covering us through calendar year 26?
It's covering us through calendar year 26.
Yeah.
Okay. And then next fall, we would be able to determine through the RFP if what our product or company our vendor would be for 27.
And not to tip my hat too much, but I'm hoping that that's decided way before the fall of next year.
Fair. Okay, great. Thank you.
Other questions? Hearing none, I'll take a motion to approve the HMO partners special procurement contract. Motion, Secretary Biscuits, or second?
Second.
Second by Commissioner Marshall. All those in favor of the motion, please say aye. Aye. All those opposed, no. Motion passes. Next is United Healthcare.
So the United Healthcare, this is the 1-year renewal for our Medicare Advantage group PPO plan. This would take us through December 31st, 2026. We do not need to add funds. The current funds that are authorized will cover this extension. Rates did increase $60, and we'll discuss how that kind of flows through in the next section when we're looking at rates. But again, just a 1-year renewal, no additional funds will be needed.
And the cost on this is not just admin, that's also claims cost as well. The $347 million.
Well, we don't know because we don't have claims. United Healthcare absorbs all the claims and because they are fully funded. So the cost of the claims are on United Healthcare. It gets passed through us when it looks at the rate setting and that.
Now, what is the cost of 347? That's the premium cost?
That's the premium cost for the full 7 years. If this were to extend to
For the
7
full
years.
7 years.
Currently, we're running at about $47 million.
Any questions? Hearing none, I'll take a motion to approve the United Healthcare renewal. Motion by Secretary Fisley. Is there a second? Second. All those in favor say aye. Aye. All opposed, no. Motion passes.
Okay, the last one, sorry.
Okay.
The last one is a special procurement for our HSA FSA COBRA benefit. And this is to get us through the end of this year. We are already in the evaluation and discussion phase for this contract that will be awarded, and we can switch over in time for a January start date. So this we're only extending for 4 months, and the total cost is $75,000.
Any questions? Hearing none, I'll take a motion to approve the Optum special procurement.
So moved.
I think Commissioner Marshall has a second. All those in favor say aye. Aye. Those opposed, no. Ayes have it, motion passes. Rates.
Give me a second. I want to make sure I correct y'all to the right. Okay, at the end of your section, page 182, you will see a million presentation that is titled 2026 preliminary rates.
Was that reference, page reference?
182. I'll make this as pretty short and simple. We are holding rates for active employees on both the school side and the state employee side flat for clean year 2026. We are proposing an increase on the retiree plans for plan year 2026 of $6 for both the Medicare Advantage plan and the Health Advantage supplemental plan. And that is a result of the UHC one-year renewal that's $60. The state absorbs 90% of that, and the retiree has 10% of that. So that's the $6. And we wanted to make sure we're having parity between both of the retired plans. So that's why both are getting the $6 increases. With that, I'd be glad to answer any questions.
Any questions on the rates? You were just looking strictly at the state employee rates.
Right, I've covered both plans. Forgive me, there was one thing I did forget. On the classic plans, we did have to increase the deductible from $3,300 to $3,400 in order to keep up with the IRS guidelines of definitions of a high deductible health plan. And that again was both on the public school side and state employee side.
Any objection to batching these together? Now I'll take a motion to approve both public school and state employee rates for 2026. Motion, Secretary Fiskett, is there a second? Second. All those in favor say aye. Aye. Opposed, no. Motion passes. Number 8 is approved.
Now we will go to page 172, titled June and July formularies. When looking at the next page titled June 2025 ABD Pharmacy Formulary Recommendations, a lot of what you're seeing is a brand rolling off and us adding on a new generic. And then for like the first one, the Alphatrek, that is replacing Trifecta, and this is just getting a better compliance and more favorable dosage pattern, so that we're making sure, again, that we're having that patient compliance with it. The next one is a swap from a brand to a generic. The next two that are related to the autosomal dominant polycystic kidney disease, we're still studying that drug class and making sure that we're getting the right mix and the right drug strategy on that. So that's why both of those are not covered. The next 4 are brands switching for generics. And then the next 2 on the Niemann-Pick disease, those are new to market. Not covering those just to give us time for efficacy. On the Valcado nasal spray, just changing the quantity limit. The Prevnar, that's staying in line with adding vaccines and following law around $0 vaccines. And then you'll see the multivitamin, again, that's just studying that drug class and moving those to over-the-counter, not covered. Any questions on the June? Okay, on the July formulary, the first 2 for the chronic myeloid leukemia, swapping out a generic for a name brand. We are doing a lifetime grandfathering for those that are on the name brand. The next are just changing the age restrictions around the RSV vaccine. The oxycodone ER tablet, that's no longer available. So we're going to not cover, and again, giving our typical standard 90-day notice on that one. The next 2 for the type 2 diabetes, this is around their GLP-1s. We just have better GLP-1s and brand discontinuation going on there. So that's why they're not going to not covered. The Brixity solutions, that NC3P diagnosis is just a coding that it's going from a pharmacy benefit and needs to be run on the medical benefit. So we're adding it, but it's going to be run under the medical benefit. The next 4 boxes around diabetic testing. The Accucheck and One Touch brands are in financial distress situation. So we are removing them from our formulary just in preparation and knowing that they're no longer going to be manufactured and won't be available. And we are switching to the Freestyle brand and their testing strips. So that's what you see is going on. That's why the Accucheck ones are moving to non-covered. The Freestyle are moving up to the exact same setup that we had, but just moving on and favoring the Freestyle brand and manufacturing. I do want to pause there, and if there are any questions specifically on that change. Okay. The rest are just new to market drugs that we will keep not covered until we have a better study of efficacy and cost effectiveness. Switching and continuing on with the August formulary. The Everlist and what we're doing on that one. Currently, the oral suspension is a particular NDC code. We actually have an alternative that can be crushed and mixed in an oral solution and at a much reduced cost to the plan. So that's the switch that we're making there. You'll see that we're adding the next two that are related. This is just a dosage distinction on the two lines there, and quantity limits associated with those additions. The Infloza is an RSV that is available for infants less than 8 months old. So this is their first exposure to an RSV vaccine. We're adding that. The next around adrenal insufficiency, this is an infant-related condition, and we're just going to manage. The reason we're moving these to not covered is really being able to manage these on appeals and having them kind of step through therapies that are already available on our plan rather than jump to this. The Stugo tablet and injection, we're just increasing access to the HIV PrEP and they're new to market. You'll see the pulmonary arterial hypertension, just adding that on with the specialty tier PA quantity limit setup. The next one for myasthenia gravis disease, we're adding that to the pharmacy benefit and shifting it from the medical benefit, and this will reduce the medical spend. We can get it at a more favorable price. The next two around hypertension, just adding those on at that special tier and with the age restriction. The Averi tablet, this is a new contraceptive, and again, following in line with regulations and laws around that, adding in at a $0 copay. The ones related with Wilson's disease, we're reviewing the product class and looking for effectiveness and overall lower cost for the plan. So right now, that's why those are going to the zinc gluconate tab. We're going from a name brand to a generic. And then the pulmonary arterial hypertension, adding that on with a PA and specialty tier. And then the last one for heart failure is just adding the generic. So I'll pause there. Have there been any questions on the pharmacy for June, July, and August?
Any questions? Go ahead and take a motion on approving the formularies for June, July, and August. I know for the minutes, I'm going to abstain from voting on any changes to the AccuCheck freestyle changes on the diabetic testing strips. Have a motion?
Motion.
Motion by Secretary Biscuit, your second. Second. All those in favor say aye. Aye. All those opposed, no. The motion is approved. Move on to medical.
All right, so now we're going over to the medical benefit, and for those that are new, and my annual quarterly reminder when it comes to medical, these are drugs that are benefited, that are administered in a clinical setting and that are run through our medical coverage, not necessarily the pharmacy coverage. A lot of what you're seeing in the first page, and they're grouped together, is this adding on biosimilars as they are coming onto the market. We're shifting from the name brand to favor the biosimilar. Still same setups when it comes to covering with a PA. In instances where you see there are two biosimilars, we are going with the lower cost alternative at this point. So that will take us all the way down to the Immunosoda, the Crohn's disease, the biosimilar for Stelara. We already cover other biosimilars for Stelara, so that's why we are excluding these at this point. The Ovacell for acute lymphoblastic, starting right there, and the next three, these are CAR T treatments. And what that treatment is last line defense in cancer care for these particular conditions. They will use your blood, the patient's blood. They go and run it through the medicine, and the medicine attaches to the T cell, which strengthens the T cell's ability to fight the cancer. Then they reinfuse the treated blood back into your body, essentially curing the cancer. What you'll see on the first one with the Ovacell or the acute lymphoblastic leukemia, we already covered and are favoring Brexacell. So that one is why we're not adding that one to market or to the list. The next one, or Cilta-cel for the multiple myeloma, there was an amendment made during the advisory commission meeting that instead of no EBRX restrictions, it would actually be covered with a PA. So we do need to continue that. That has been amended from what is in your packet, and the current setup would be to cover with a PA following the advisory commission's recommendations. The next one, again, we're excluding it because we're favoring this Cilta-cel one above it. The next two are vaccines. The first one is the prevention of the virus disease. It's a travel vaccine, and RSVD is set up that we don't cover travel vaccines. The next one is treating Ebola, and it comes out of the national stockpile, which is no cost to our plan. So that's why we are covering it with no EBRX restrictions. On to the next page, and the hemophilia. We are waiting to, we're going to currently exclude because we're going to take a complete review of the hemophilia class and figure out, because of the latest advances in treatment, we're seeing that there are potentially more effective or cost-effective ways to treat it rather than having to do the traditional treatment courses. We just need to do the cost evaluation. We need to study the efficacy and make sure that they're right. So that's why we're pausing, so that we have time to do that work. The next one that I'll highlight is the Zevtera. This is just, it's a DRG, which DRG is administered kind of in your medical billing. It's a medical billing code. We don't want to get in the way of those being treated. When you have that kind of DRG, that's an emergent situation. We don't want to slow things down with PAs or anything like that. So that's why you're seeing that covered with no restrictions. The Ryalzunta, we have alternatives already on formulary. The Emblavo, same DRG setup. We're just not going to get in the way of that one. The Xivacan, these sheets, this is a gene therapy, and there are just too many unknowns at this point related to this. We don't know how many sheets it's going to take. It's $3.7 million per sheet. Somebody can only need one. Somebody can need 12 of them. We're not really sure the efficacy and the utilization, if it actually is showing a positive outcome. So that's why we're going to hold off on treating this particular disease or that particular one at this point. The cardiac septal infarction drug, that's a DRG as well. We don't want to get in the way of that. That's why we're adding with no restriction. You'll see the Infloza, again, we're adding along with the pharmacy benefit. We already discussed this one. We're just when it comes to vaccines, they can either be administered through the pharmacy or at a doctor's office. We want to make sure they're both covered. The Ryan cell, we're excluding this. We just, again, need more data to really see how many repeats are necessary. If they are, this would be similar to the CAR T, a last line therapy treatment. The schizophrenia drug, we're just adding for additional access in that class. And then the geographic atrophy drug is just underperforming at this point. So we're going to continue to exclude that. And with that, I'd be glad to answer any questions.
Any questions? Hearing none, I'll take a motion to approve the method recommendations for 2025.
Commissioner, I do have just, do we need to reflect anything based on the multiple myeloma?
I would feel good if we could say approved as recommended by the advisory.
I'll make that motion to approve as recommended by the advisory commission.
Is there a second? Second to that. All in favor of the motion, say aye. Aye. All those opposed, no. Motion carries. Great, I think that's it. That it?
That, I hope it's it.
We can do more.
It's you can do a lot of good if you don't mind who gets the credit.
Okay, well, I do think that covers all of our agenda. I appreciate everybody's participation in this today. And with that, I'll declare the board of finance adjourned.